Oil prices are extending gains on Friday after a surprise drop in U.S. inventory, a factor which indicates strengthening demand, but also serious disruptions due to Ukrainian attacks on Russia. Brent is now trading at more than $85 a barrel. WTI in the U.S. trades at $81 a barrel, but they are both up 3% on a 4-month high amid heightened geopolitical risk. That's as Ukrainian drone strikes on Russian refining facilities continued for a second day on Wednesday, causing a fire at Rosneft's biggest refinery in one of the most serious attacks against Russia's energy sector in recent months. Two sources said the refinery had been forced to shut down 2 primary oil refining units. Ukraine earlier caused serious damage to Russian multinational energy company Lukoil's refinery in Nizhny Novgorod as well. For more on this now, let's go to Nadia El-Bilassi, who is a market analyst at Equity Group, and she joins us now from Dubai. Thank you very much for being with us today. I think it is fair to say that until now, we hadn't seen major movements in oil prices, despite many ongoing geopolitical conflicts. Why do you think that was the case?
That's true. We've seen that oil prices are in a very sideways range since last year. And that is because markets are already expecting OPEC plus cuts. They've factored in OPEC plus cuts, and they've also factored in that we have tighter supplies because of the Red Sea disruptions and also what's going on in Russia with Russia and Ukraine. So all these things are already factored in the markets, and markets are actually focused on the Fed rate cuts and what's going to happen in the elections. So I think this is also taking a bit of investor focus right now. Also, this comes in after earnings season, which was catalyst for, the rises of the Magnificent Seven. So that's why we're seeing also sideways movement for OPEC plus. But I think in the March meeting, we might see more news. We've already seen that Russia has volunteered for more cuts as well. That could potentially play a role in oil prices also going more higher.
Interesting. Nadia, what can we say about the demand side? What do you expect will happen on the demand front, especially from the biggest importers, China and India, but not only, also from Europe?
Well, the IEA, the International Energy Administration, they rose their forecasts for oil demand for 2024 and 2025. So this is really moving markets right now. This is why oil prices were also seeing gains up to 4% this week. They're poised to see these gains. From China, obviously, we've seen since the beginning of the year, oil demand has slumped. And if China continues to struggle with the property sector or the housing market and the China midpoint fixes, daily fixes, and the intensity of things, we might see that oil prices will go higher. But if China's outlook gets a little bit better, then we can then see that oil demand will go higher, definitely all over the world. And we're still seeing spikes in India as well.
Nadia El-Bilassi, thank you very much for your analysis on oil prices.
Thank you.
And now a quick look at some of the top stories from around the world. The UK has begun trade talks with Turkey in an effort to secure post-Brexit deals. Talks opened in London with the Secretary for Business and Trade, Kemi Badenoch, meeting with her Turkish counterpart, Ömer Bolat. They discussed negotiations on an updated trade deal to improve the UK's access to the Turkish market. Trade between the two countries was worth $33 billion in 2022. US bank regulators have fined JP Morgan Chase more than $382 million over its inadequate program to monitor firm and client trading activities for market misconduct. Regulators also said that JP Morgan failed to properly monitor billions of trades across at least 30 global trading venues. JP Morgan have said they self-identified the issue and are taking remedial actions. China's new home prices have dropped for an 8th straight month in February, falling by 0.3% month-on-month. On a year-on-year basis, prices fell 1.4%. That's the biggest decline in 13 months. The property sector has remained sluggish despite a slew of new measures to shore up the sector. Analysts attribute the price declines to a slow season, as well as disruptions caused by the Lunar New Year break.